everybody. Good morning, and welcome to the day after Thanksgiving edition of the Daily Bread. It is November 27th, and we are looking at the markets today here at Harvested Financial.
Hey, everybody. Good morning.
So it is looking like the markets are up just a hair. We're about 12 points up in the SPOOs. That's a $1.20 in SPY. So I'm going to show you what I'm looking at here today because it's an interesting day to trade, to say the least. A lot of people are focused on Black Friday. A lot of people are focused on, not necessarily trading in the markets right now. So we're going to have a relatively calm day, and that's going to probably mean that liquidity is relatively thin. So that's always an interesting thing to deal with and manage as you're looking at option strategies and executing them, potentially initiating them, potentially rolling them. So we're going to talk about liquidity in two places. We're going to talk about liquidity getting into the trade today. And then we're also going to talk about what month we might think about selecting in the future, because liquidity on the outside of the trade is also really going to matter here. So today, being November 27th, like I mentioned, if we were going to enter into a month out trade, we'd be looking at December 24th. So that's about 4 weeks out. It's actually the day before because it's December 24th. That's particularly interesting because that's going to be Christmas Eve, which is another low liquidity day. So if we're looking at our 4 week out options, it's not going to be quite as easy to get into them, because market makers are preempting the fact that that's going to be a slow day. So they're probably going to quote these a little bit wider, but it's also going to be more difficult to get out. So I'm going to show you a little bit what I'm talking about here. And I'll just pull up my little annotator. And if you look at these markets, at the money right now in SPY, that's almost 8 cents wide, or it is 8 cents wide on the call side, and that's about 4 to 5 cents wide on the put side. Interestingly, those puts are getting quoted relatively tight. We've got 4 cents here, but these in the monies on the call side, wow, 16 cents wide there. For SPY, that's a very illiquid market. We're used to seeing things 2 and 3 cents wide here. So that's a factor of both today's day, being that it's the day after Thanksgiving and everyone's been loaded up on all their delicious Thanksgiving meals, but it's also the fact that it's December 24th and that's going to be tough to get out of. So while we might be able to find price improvement in there and in between some of those markets, we really have to think about the liquidity and what the total cost is going to be on this trade. So if I were to set up a butterfly, let me just show you what the compounded effects of that liquidity cost is going to be. So if I set up something that's, let's do a diversify-ish structure here. So if I set up that 364, about at the money, we're trading 363.95 right now. So sell 2 of those. I'm going to go up, 3 points here. Let's make this a little bit more of a bullish trade. So I got 3 points there, and I want to set my max risk, maybe around $1.50. So if I take $3 there, maybe I'll only take 4 or 5. So let's pick the 59. So I can, to recap, I've got the 359, 364, 367 butterfly on here. So my at the money with the 364, my upside wing is going to be the 367, and my downside is going to be that 359 right there. So I can enter into this trade right now, it looks like, for a credit midpoint of 40 cents, but this market's pretty wide. To actually cross that, let me just, I guess I got to clear all the drawings. Sorry about that, everyone. So I'm looking at this market right here. So to cross that market completely, that's going to be a 27, 29 cent credit. My midpoint is 40 cents, so that's 15 cents away, and I've got 15 cents more on the offer side. So, to join the approximate offer here on this, i.e. post my 2 contracts there, post my bid on the bid and my downside wing on the bid at 5.30, that's 56 cents credit. So we're talking a really wide market, 27 cents. In theory, if the midpoint of this is 40 cents and you've got that much padding on either side, that shows really the value of execution. So a lot of things to think about here when we're trying to decide what trades to enter. So let me compare that to perhaps a serial expiration. So we're going a little bit further out. So in January, January is both further out, but look how much tighter these markets are. At the monies, well, we got 7 cents wide on the call side. So remember, they were 14 cents wide before, and 4 cents wide on the put side. but we've got the 3 cents wide that we're used to seeing, 7 cents wide in those deeps. We were seeing 15 cents before. So you go to the serial expiration, and January is a particularly interesting one. So remember, that's 49 days out, January 15th. This is the expiration that has been on the books for the longest. So there's going to be the most liquidity there. Market makers, dealers are looking to get in and out of their trades, so they're willing to provide tight competitive quotes out there. So if you're thinking about what kind of strategies to do, you really have to select your expirations with intention. Going forward, December 24th, that's going to be a tough day to get out of those trades. There's not going to be that much liquidity. Same as in today. Selecting November 27th as your expiry date is going to give you some pretty wide markets. Just one final look right here before we go. So we actually do have a penny wide in the calls. So these upside calls that I'm looking at are a penny wide all around, but 4 cents wide here. Heaven forbid you have something in the money and that's 10 cents wide. You're starting to cross that spread to get out of a strike that could be very much in play. So really picking your expirations is very important here. And I think that's kind of the summary for today for this lovely Friday after Thanksgiving. So here at Harvested Financial, we manage all of that for you. Picking expirations, deciding what strikes to choose, that is our job. That is why we are the advisor that manages option strategies for you. So pick one of our model portfolios, set it and forget it, and we will roll into a lot of interesting trades for your portfolio going forward. In honor of Black Friday today, I want to give a shout out to our promo code, which is go to harvestedfinancial.com/Black Friday, all one word, and you will get $5 off your first 3 months here. So check it out. That's harvestedfinancial/Black Friday for $5 off your first 3 months with us. Everyone, enjoy the rest of your weekend. We appreciate you and thank you for joining us here today.